So buy low, sell high, throw that in the garbage can. You want to buy high and sell higher. Every trading book written by a real trader will tell you exactly that. Jesse Livermore, Mark Minervini, Steve Burns, you name it, they all say the exact same thing. Buy high, sell higher.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Uhl. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive value, and that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at aistocktradingsystem.com. That's aistocktradingsystem.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Ladies and gentlemen, welcome back to the Schaeffer's Market Mashup. This is your ever dutiful host, Patrick Martin, coming to you, unfortunately, not from a South Carolina beach anymore, but the suburbs of Westchester, Ohio. I am very excited to introduce this week's guest, Christopher Uhl, CMA. He is a two-time top 100 person in finance and the host of the 10-Minute Stock Trader. Chris, how are you now?
Hey, thanks for having me, Patrick. Looking forward to chatting with you today.
Great. And I take it you're in the Dallas-Fort Worth area? How's that right now?
Yes. Oh, yeah, it's great. I mean, everyone's moving here. I mean, if you haven't heard, every company is up and moving to Texas. So if you're not here yet, you will be at some point.
I have one friend who is moving to North Texas, but besides that, I'm afraid to say I've only been in Austin briefly. So I'm a little behind the eight ball right now.
No, it's okay. There's two types of Texans. There's people who like Austin and people who don't. And I'm in the don't camp.
Interesting.
Yeah, it's funny. I've lived in Texas my whole life, and every time I go to Austin, I just shudder because it's just a terribly laid out city.
Okay.
Traffic is miserable. The people are terrible. It's just not where I want to be. But then on the other side, there's people who would like fight me and say, no, Austin's the best place in Texas. So, like I said, there's two kinds of people. Some that like them and some that don't.
That kind of sounds like almost, coming from a native, that it's jumped the shark, essentially. Almost a little bit like a Nashville where it's over touristy. Am I right?
Probably so. Yeah. I mean, the last time I went there was for a Formula One race, and the racetrack is amazing. But getting around Austin, going to hotels, going up and down 6th Street, doing the whole Austin thing. This is pre-pandemic. It's just not my scene. Like I said, it's just not my scene. It's right for some people. It's right for Elon Musk. It's right for Joe Rogan, but it's not right for me.
So let's jump right in. I looked on your website. You are very candid about your investing mistakes. You shouldn't really call them mistakes, lessons, I guess. Do you want to walk through some of the highlights of what got you to where you are now?
Oh, yeah, absolutely. So, I've early on in my career, I decided that whenever I had a mistake or a lesson, I considered it my Wall Street tuition. So 5-figure Wall Street tuition. Could have been worse, I suppose.
Yeah.
But, you think of like a doctor or a lawyer or any sort of professional who jumps into their profession, their career, they can't do it overnight. But yet the trading industry is full of people who say, take this course, do this lesson, follow these 3 simple patterns or whatever, and you'll be an instant millionaire. It's just not true. And the reason I'm so frank about it is because I don't think there's enough people who are, right? And I think that that's why I've gotten the audience and the recognition that I have, is that I'm there to be vulnerable so other people don't make the same mistakes I did. I mean, Patrick, I blew up my account the first time, 60 days within opening it. Like the stat is 90% of traders blow out 90% of the account in the first 90 days of trading. I beat it 60 days. The way I did it was I was overconfident and taking way more risk than I ever should have. But at the same time, I learned a lot from it. And the big takeaway from that point, when I lost the account the first time, I was trading against trends. I had no idea what I was doing, like I said. But I also wasn't going to give up. And I remember driving up the Dallas North Tollway with my wife, since we're going to be specific here. She was driving, which is a very unusual circumstance, but she was driving. I looked over and I was like, Jennifer, I got to tell you something. He's like, what? And I was like, I started trading a few months ago, or a few weeks ago, really. She's like, yeah. I was like, things haven't gone so well. She's like, what do you mean? I was like, I lost a lot of money. And she's like, how much? And I was like 2/3 of the account. And she's like, what do you mean?
Brake slam.
Yeah. And I'm like, well, I learned a lot. And she's like, okay, Chris, don't even think about trading again. Can't you learn to trade with fake money? And Patrick, the light went on in my head, and I'm like, oh, paper trading. That's a great idea. A great idea on how to learn to trade. So I did that, and I did that for several months, to the point where I felt really confident again. And then gold was tanking. I don't remember what year this was. In the 2015 ballpark. Mm-hmm. Gold was tanking, like hitting recent decade lows. And I'm thinking to myself, this has got to be the bottom. Several people on the Twitters that I followed were all saying this has got to be the bottom. So I'm like, let's go long gold, long silver, long GDX, long GDXJ, long every possible thing with metals. Mm-hmm. And it kept going down. And it kept going down. And Patrick, I don't know if you know this, but it kept going down after that. And again, I was staring at a loss, because I had refunded the account, got things back up and running. I was staring at a loss that was about 2/3 of my account again. And I'm like, son of a bee, this, okay, I am doing something wrong. Mm-hmm. And the way that I learned to trade, I feel, is not conducive to most traders. So I learned to trade with selling naked calls, naked puts, taking much higher leverage for a much smaller return, right? Mm-hmm. Like, let's say taking 10 units of leverage for 1 unit return. And if you lose on those one trade, you lose 10 units. Yeah. And then you got to start all over again. And now you have to get 10 perfect in a row to get back to even. And I was like, this sucks. This is not right. I mean, there may be a high probability setup with this, but I am on the opposite end of the curve. Mm-hmm. How is it how am I getting all these wrong, right? So then I started thinking, okay, there's got to be a better way. So I started the podcast, which is approaching nearly 2 million downloads now. It's called How to Trade Stocks and Options Podcast. And in the process, I have talked to some of the brightest traders in the world, and it's completely transformed my trading. And at the end of the day, the best piece of advice that I can give to somebody is, number one, buy low, sell high is the quickest way to the poorhouse. That's not how trading works. Patrick, if you bought something at $10, A, it's a pretty crappy stock because it's already at $10. Mm-hmm. B, you bought it because it was on sale, right? Like at the grocery store. It's on sale. I'm going to get a great deal on it. But Patrick, not only was it not on, it was on sale today, but it's going to be on sale tomorrow, but for a bigger discount. And the day after that, and the day after that. And it's the opposite of the grocery store getting things on sale mentality when you're using financial products. You've got to buy them when they're going up because the market is going up. Because people are buying the stock. People want to be there. If you're buying something that everyone wants to get out of, in the simplest form, you could think of it like with GameStop when it was hitting its all-time high. And then Robinhood locked it down and said the only thing you can do is sell. There was no physical possibility in this world that it could continue to go up. It could only go down. So if everyone is selling, everyone's getting out of the stock, and you've seen your stock drop from 20 when you liked it, 10, you must really love it, 5, man, that's the blowout deal of the century. Who's to say it's not going to go to 1 or 0? But let's say your stock that you used to love at 20 is now gone up to 30, and everybody's getting into it. You see a high volume rally. It's above every moving average you've ever seen. You've back tested it with all of your data that you have access to, and you can see, hey, you know what? As long as it's above its 10-day exponential moving average, something like that, for example, it has shown a historical win rate of like 120% over the last 2 years or something like that. This is the kind of thoughts that go through my head. It's like, the last thing I want is something on sale. I want something as expensive as possible because I know other people are trying to get into it. So buy low, sell high, throw that in the garbage can. You want to buy high and sell higher. Every trading book written by a real trader will tell you exactly that. Jesse Livermore, Mark Minervini, Steve Burns, you name it, they all say the exact same thing. Buy high, sell higher.
Yeah. It makes sense from a standpoint of if this is something you're going to own, don't you want it to look good for everybody? You know,
I don't care what everybody thinks about it. I really don't.
It's
I mean, what I care about is if I'm buying it at 30 and it goes up to 35, right?
Yeah.
And the way that I really think about, I mean, I have you could call it like a 5-step system, right? One of the steps in the system is to use back-tested trend lines, right? And some people call it support. Some people draw shapes on charts. I can't do that. I am very much a data analytical person. So if I can go in and I use TrendSpider for all my back testing, it's really cool. You can click a stock. You can say, tell me the back tested results every time it's above the 5 exponential moving average and exit every time it's below the 5 exponential moving average. And you see what those results are. Try it with the 10. Try it with the 15. Try it with the 20.
60.
And basically, you can get in anywhere while it's going up the stairs, right? But you've got to know when you're going to get out. Because, I mean, if it's going to go from 30 to 100, you could get in at 35 or 50 or 70, as long as you understand that you've got $1 or $2 of risk or something like that. So I am not at all a long-term holder. Not a 10-minute holder. I know that's a misnomer. We can talk about that in a minute. But I want to be in and out of something with the weakest hands possible. If it's going up, I'm there. But as soon as it turns around, you can have it back. I don't want this. It's like hot potato.
It's not a fast pace. It's a reactive pace, I feel like. The old John Wooden phrase, be quick but don't hurry. And so you did mention the 10-minute trading thing. Was that something when you were founding this company, was that something you were cognizant of, or did it kind of come along later on?
So let me tell you how it came about. So I was working in corporate finance, went the whole corporate finance track, and I'll tell you the whole story. It's one of my favorite things. So I was working in corporate finance, and I overheard 2 people in the office talking about, if you really feel so strongly that Deutsche Bank is going to go down, why don't you go out and buy puts? And people who have listened to my podcast would know I've told this story 100 times, but I love it because, like, immediately the light bulb went off in my head, and I'm like, what are puts? I've heard of puts. I went to business school. I know about this. Hang on a second. And so I'm Googling it, right? And it's like, put rises in value as the stock price goes down. And I'm like, ooh, this is cool. Okay, so you can make money when stocks go down. I didn't even realize that because I hadn't really traded, right? I just did, corporate finance, accounting type stuff. And then I was one of those nerds who kept all my textbooks. And I turned around behind me and I pulled out my finance textbook and threw it on the table. And, it's one of those 900-page textbooks where you drop it and the whole earth kind of shakes a little bit, right?
Yeah, it's wider than it is tall, essentially.
Yes, yeah. And it had 2 tabs on all 900 pages. One of the tabs was for bonds, because bonds, they're wacky in the way that they do pricing with the yields going up and the price going down, etc. But the other tab was for options. And I'm like, how did Chris from 10 years ago know to put this in there? So I flipped to this page, and I'm reading all about the options. And keep in mind, I'm still sitting at my desk, and I'm like, oh, this is kind of cool. All right, let me check this out. So I was Googling around, and I found several websites that teach how to trade options. And like I said, the majority is basically just sell puts, sell calls. It doesn't matter. You've got a 30% probability of profit at a 70 delta and 30 delta or whatever, all day, every day. You don't have to worry about trends. Trends don't exist. The market is sufficient. All this stuff that as a actual trader, I don't believe in anymore.
Yes.
And then I needed to fund my first account, and I can't remember where the account. I feel like it was like a Schwab knockoff. Like it was Options Express by Charles Schwab, and it was awful. The worst platform I could have ever wanted to learn on, right? But it was the first one I found. And so I was like, okay, they need $5,000 to open the account. And I was like, where am I going to get $5,000? So I'm looking around and I'm like, I've got this old 401k that I've literally done nothing with ever. It was at a previous job. I never contributed to it. And it was just sitting there. And I'm like, let's cash it out. So I cash it out. I get the check. I remember walking into my kitchen, opening the envelope, pulling out the check. And I kid you not, Patrick, that check, I needed $5,000 to open the account.
18 cents more. It was 18 cents more.
$5,000.15.
15. Yeah.
It was exactly like 15 cents. And I'm like, whoa, is this not a sign from God or what? Like, I am on the right track here. Which, of course, like I said earlier, I proceeded to blow the next 2 months. But it was a lesson learned. But, my trading these days, I really just, I go with the trend. I still like to sell spreads, right? But I'm not selling anything naked. I'm not selling anything just willy-nilly. Like, if a stock is going up, you better damn believe I am not selling calls against that. But I'll sell puts. I'll sell put spreads. I'll sell, a $5 wide put spread. Why not? As long as it's below a backtested trend line, you've got a hellacious probability of profit right there. But I'll also do a what some people call a stock replacement, which is buying a deep in the money call, paying little extrinsic value for it, and you're really getting a huge amount of leverage there. You get 5 to 8x leverage versus just buying a stock outright. So if I hadn't started the podcast and if I hadn't learned my Wall Street tuition, I probably would have been continuing to make the same mistakes over and over. And that's just assuming that A, the market's efficient, which probably goes against, half your audience, what they think.
Yeah.
And B, that you can, a 30 delta call has just as much probability of winning as a 30 delta put, right? And early in my media career, I wrote articles for a few different websites, and I was like, hey, do you like oil? You could sell a call or you could sell a put. Either way, you're going to have a 70% probability of making money on it. And now looking back at it, I'm like, I was really ignorant then. Like, good intentions, but not wizened enough to talk about that.
I think that's the first stuff you write, you always look back on and say, like, why did I say that? We touched on it briefly, but for the summer of 2021, what macro trends do you see on the horizon, and then any option strategies that could be heavily utilized this summer?
And for me, that's not the greatest of questions or topics. And I only say that not as a criticism to you, but because like this week I'm long financials. Like I'm in Discover Financial, Fifth Third Bank, Charles Schwab, and I'm also long some oil. But I could be out of all that by the end of the day. Like if all that turned around, by the end of the day, I could be back out.
Right.
And I don't keep a long-term focus. I keep a very, very short-term focus.
Okay.
But here's something that your audience could do that they may find useful. I've got it built into a spreadsheet, so I don't have to actually do anything. But like take, for example, the sectors. So like XLE, XLF, things like that. Take the relative strength, so just basic RSI.
Yep.
Take RSI and then divide it by the S&P 500's RSI.
Okay.
By doing that, you're going to get a relative strength across the market. So you can say, let's say XLE Energy has a 30% on your relative strength calculation there. And then financials, XLF, has a 50% relative strength in your calculation there. Financials are a better buy.
Yeah.
And then you can just go into that sector and find what works best for you. But that's how I narrow my focus.
So you
is literally doing that very simple calculation and saying, if this is the best sector in the market, that's where I want to be. That's how I caught the whole move in oil earlier this year. Like my account went up like 75%. I thought it was like king of the universe, right? Because it's like I caught all of these moves. I caught every single stock. I caught oil and all the Exxon, Chevrons, whatever's. And it was literally because I had taken that calculation and saw, oh, geez, XLE is performing really well against everything else in the market. Let me go investigate those. Got long those. Boom.
And then you picked out the one.
Worked all at once.
You picked out the ones. Okay.
It's a really simple metric. I have not seen anyone ever talk about that. But when I discovered that, I was like, this is a big deal. Like, this actually seems to work. No, it doesn't work every time, but it does give you some insight into where the money is going. Right? Because then you can it's an apples to apples comparison versus anything else that's, an apples to orange comparison.
Well, I also think that relative strength is something that a new or retail trader can easily grasp. It's a concept I think that is a lot more digestible than some of the other stuff that's out there.
And it'll make a lot more sense when the S&P 500 is not hitting all-time highs every day. And then you've got more opportunities in different sectors, right? Because like when the S&P 500 is, let's say it's coasting at a 70 or 75 RSI, not everything is up there. So not everything is showing like a greater than 1 value. But let's say the S&P is down at like 60, 50, 40, and then you see something that peaks really strong, like let's say at that point, industrials, XLI, has an RSI of like 60 versus the S&P of 40. That's 1.5 times as much. That's where the money's going right now. You should be checking out the industrials.
Yes.
So that's an easy apples to apples comparison that somebody could make. And this is, I just discovered that this year. And as soon as I discovered it, it was like a game changer in my returns. And so I'm telling everybody I can, like, this is a very simple metric that you can easily calculate in 5 seconds. And you can use that. And, just do it on the 11 sectors. How long would that take you a day? 30 seconds if you got a spreadsheet or something like that?
Yeah, not even that, especially with some of the tools that I know people are gaining access to. Yeah, I really like that. It's kind of an opening salvo, and then you dig deeper from there, and you pick out which ones you want.
It'll get you on the right playing field, right? Instead of trying to play basketball and football and baseball and all the other racket balls and lacrosse balls and things like that, you can just go straight to, oh, everybody's playing football. Yep. I need to go play that.
I like that. I like that a lot. I want to pivot just for a little bit here. You are very active on social media, and I've had a couple other guests that I wanted to pose this question to them. How do you parse out, filter out the trustworthy information you see out there when it comes to investing? There is so much risk, I think, of information overload, analysis paralysis, or just straight up bad faith advice that you see on Twitter or on stock twits. What's your kind of filtration system that you use to look through that kind of stuff?
I think Jesse Livermore even said it way back in the Reminiscences of a Stock Operator, that you have to do your own research for yourself.
Yes.
You can't rely on somebody. And like I said earlier, right? I'm in Discover Financial. It's been busting it. It's up 12% this week. My stock replacement strategy, the in the money deep calls, they're up like 90% over the week. Everything's going awesome. But if I told you that today, Patrick, and you went out and bought it today and it went down tomorrow, you'd say, this Chris guy has no idea what he's talking about.
Exactly.
So I would tell somebody, because I fell into this a long time ago, of following what I guess you could say like Twitter gurus were saying. And you're not going to find me out there putting trade recommendations. No. I mean, you can go through my feed. You ain't going to find one. Yeah. Because my trading is not your trading. And I can't tell you how much to trade. I can't tell you when to get in. I can't tell you when to get out. And if I keep a journal of all my trades, but there's lots of great people you can learn from. Like Mark Minervini, he's fantastic. I just had him on my podcast a couple of weeks ago. You can learn a lot from Brian Shannon. The guys at TrendSpider, they're fantastic. But you've got to make your own decisions, like literally your own decisions.
I think you also have to put in your own sweat equity, where if you do see a piece of advice, not necessarily a recommendation, because I like, you're right. Anytime I see something like that on Twitter, I am incredibly leery of that. But even if you see like advice or just thoughts or just, ruminations, you kind of have to run it through, you put in the work and look at this through your own lens. I'll give you a very simple, basic example that I saw. I saw on some Twitter, and it was some random account with 6,000 followers or so. It got retweeted, it got picked up by some big thing, and he listed all the big names that he's watching for 2021, and then with like a little brief blurb about it. And the person called this company the Chinese Tesla. And it takes 2 seconds of research to look and say their headquarters is in Arizona. And you had all these people being like, wow, love this pick, it's great. It's like, guys, you have to do your own research. You can find a couple people, like you said, and I think it's very important that you latch on to a couple people that you trust, but you have to put your own sweat equity in there.
I agree. But when you put your own sweat equity in, be humble enough to say when you're wrong.
Yes.
Right? Mm-hmm. Because you may... I have been guilty of this, and I've heard of a lot of other people who have been guilty of this, that they will analyze the trade to death, and they're like, all right, I'm ready to go long Apple. Mm-hmm. And it's the day Apple goes down. But they'll never get out.
Yeah.
Because they're like, I did all the research. This should be going up. Should never be in your vocabulary. It either is going up and you're riding the trend, or it's going down and you're planning your exit.
Right. That's a very good point.
I am
That's
very much a very simple trend trader at the end of the day. Now, I get lots of different ideas from different places, but if the only thing that matters is price going up or price going down if you're going short. Well, I don't ever go short. I just go long. It's not... I mean, if you're going to go short, A, you got to have the market working for you, which doesn't happen all that often. Mm-hmm. And B, you've got to be very precise, because the largest bull rallies ever happened in bear markets. And if get in on the wrong side of that, you're toast.
Very well said. Very well said. We're nearing our time limit here, so I want to wrap up. Always like to end the episodes with giving you the floor to plug what you guys are working on. So tell me about 10minutestocktrader.com. What do you guys have coming up for the next couple of weeks?
For sure. I would definitely encourage everyone to go check out the podcast we put on. It's called How to Trade Stocks and Options Podcast. It's on every podcast platform and YouTube. We're getting this close to 2 million downloads now, and it's about 500 episodes. It's a labor of love. Mm-hmm. I've been working with a fintech firm called FinClub.ai, and they provide artificial intelligence stock picks. And originally, when they first contacted me, they're like, "Hey, we got this cool service." And I'm like, "Yeah, right, sure." And then I tried it, and I was like, "This is pretty cool."
Yeah.
And it works really, really well. I am an investor in it myself after that point, and we created a course. And in that course, you actually get a month of their software for free when you take the course. So you'll learn how to trade, and you'll learn how to trade with AI, and you'll get 30 days of free AI stock picks whenever you do that. And the way to get there is at aistocktradingsystem.com.
Great. I saw that on your site, and I was hoping I was going to get a chance to hear about that, because it piqued
I didn't
my
get a
interest.
chance to go into it, but maybe we can make that a second episode, because the first time that I used it, I was on vacation in the shower, and I made a trade, then got in the shower, got out of the shower, and I'm like, oh wow, this works.
Yeah,
that was really cool. All right, let's go out to lunch.
You step out with an epiphany. I bet you it was the best tasting lunch you've had in a while.
Exactly, yeah. So I'm a huge advocate of that. And I factor that into my trading, right? Mm-hmm. If in the simplest of terms, they give you picks. They say, stock A is going to this price by this time frame, and here's a stop loss in case it doesn't. And then they also give you like a red, yellow, orange, and green light on each day. And I take that as like gospel. If it's a green day, I'm looking to go long everything. If it's a red day, I'm going to close my computer.
Yep.
I'm out.
Yep.
So, I mean, it's a really amazing program, and I definitely encourage people to check it out. AIStockTradingSystem.com.
Absolutely. Check it out. And then, of course, 10MinuteStockTrader.com. Christopher Ewell from Cincinnati to Dallas, just like Andy Dalton. I appreciate you coming on. Part 2. It's got to happen. So we'd love to hear
Sounds
from you
good,
again in the
Patrick.
future. Take care, Chris.
Talk soon.
Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.